Okay, hope everyone can hear me now. Can everyone hear me? Okay, great. All right, let's go ahead and get started. It is now the second week of July, or the second week of the third quarter. We're going to go ahead and get started and figure out what's going on with the market, what's been going on, what is going on, and how can we trade it, right? So I'm going to have this recording available. I'm also have available for the clients members as well, for my auto clients, trade management client members, for they can understand what's going on, and maybe not so much of the technical piece, but at least they understand the dynamic of the market, what's going on, and how we plan to trade it from a basis standpoint. And then for those who are trading, the coaching students who are trading, who are in middle of trades or trying to plan to trade and trying to figure out what's going on with the market and how to plan to trade, hopefully that can be helpful as well. So we're going to start with the fundamentals. But if you can think about it from a fundamental perspective, I mean, literally, it's been one hell of a freaking market. 2022, I've never seen a year like this. I mean, I've been trading going on 7 years. It's not like, 2 decades or 20 or 30 years of experience by any means. It's, this is my 7th year of trading, which is, to me, it's a very long time to be trading, and let alone to be this long trading and be profitable trading. But I can tell you, it has been one unprecedented year. For those who have traded that long or longer, who may be watching this recording, I mean, literally everything has happened this year except World War III, right? A full-blown war. I mean, we have a little minor war between Russia and Ukraine, which started off the year with a post-COVID supply chain issue, right? We have a big bear market correction in the indices market. And then we have, what else we got going on? We got oil crisis, oil going through the roof. You got all this sanctions going on against Russia, and Russia trying to cut off gas supply. We got commodity and energy prices going through the roof. What else is going on this year? Think about it, right? We have, grain and grocery prices going through the roof. Of course, with oil prices high, over the $100 per barrel, that's creating, high $6, $7 per gallon, much as $8 per gallon, depending on where you're at in the market, in the States and around the world. And then we have, we got high inflation, CPI data across every single country. We have the euro and US dollar at parity, right? I mean, the question is, how low can it go? As we got the EC Bank, the Euro Central Banks has not raised interest rate for almost a decade, and they are been on the table of being more hawkish now in terms of positive outlook in terms of interest rate, right? So they're looking to increase interest rate now on their currency. And then we got the US Fed. It's becoming unpredictable in terms of how much basis point they are going to increase just interest rate. We don't know if it's 50% basis point, 75% basis point. We just know that they are going to increase basis point to some degree. We have high employment, and employment data has been, somewhat trickery in terms of 1 quarter or 1 month to be good and 1 month to be bad. I mean, what else we got? Supply chain issues still in tight supply. I can go. What do we just had? We just had the former Japan Prime Minister, Abe. I think that's what his name was. He was assassinated during a speech. I'm like, what the hell is going on in 2022 in terms of the market and global market? It's crazy how this year has been insane. I mean, a prime minister assassinated. I mean, they still are doing assassination now with political figures. And then we just have the Great Britain Prime Minister. He just resigned. So that was crazy. you know, and not that, you know, it's his political party, if you're in Europe, is going to make it maybe a significant impact on British pound, maybe. You know, Prime Minister Johnson, I think that's his name. Yeah, Prime Minister Johnson, not that is may or may not make a big political, you know, change in the currency. I mean, he just barely won by a narrow margin of being reelected, and now he's resigned. But the point that we had the Prime Minister of Japan, previous, right, former Prime Minister, which will probably not make a big significant impact on the Japanese currency, because he's not like he's the acting prime minister. But to have a former Japan prime minister, as they're getting ready to go through the elections, soon to be election, gets assassinated, it's just unprecedented. It's just like, what else could go on in 2022? And it all sounds negative, and it just does. But it creates a lot of volatile moments in the market that's already volatile. We got yen, you know, monetary easing that's been weakening currencies at a high presidential level. I mean, at a low presidential level, that caused the currency crosses to get pushed up to unprecedented historical level. And then we have the US dollar that is, you know, at a historical level that need to be corrected at any time, right? And the bond yields and gold prices and things like that. So there's a lot going on. And we are going to take a look and see where we're at to see how we can trade it. Because there's a lot of, I would say, all of these situations and all of these events has caused not only uncertainty among the non-traders, right? But to the traders and the investors of the currency market has become more of a what's going on, right? In terms of which way we're going, because it has been causing a lot of imbalances, if you will. And we know that the market is going to be balanced, and there is going to be rebalance. It's just a matter of when. So we have to be very careful. We have to be very diligent. And we have to be, more importantly, we have to be the two most important things as traders. We have to be disciplined, and we have to be patient, right? When we're dealing with this kind of market. Now, if you can't deal with being disciplined or deal with being patient, then trading the financial market is probably not the best thing for you, right? Let alone invest in it, right? Because those are the two most important things it takes to be a successful trader, is to learn to be disciplined and learn to be patient, right? The two most important attributes as a trader. Now, as an investor, investors, you know, want a quick return on their money, but I would say putting your money into the stock market or even the currency market is probably not the best thing for you. If those are the two things you're looking for in a historical, unprecedented year in the currency market. So those are two most important dynamic things when it comes to fundamental. How do we prepare? How do we win in the market? How do we still stay alive? How do we become productive and, you know, more importantly, profitable? And those are the most important things that you have to be aware of in terms of things that you need to be when trading in the financial market. Okay, so let's look at the fundamentals specifically for this week. Okay, so we have nothing going on pretty much today, right? We got the upper house election, which is every 3 years they get ready to do a official vote count. So we'll see what happened there. I don't expect to see anything crazy come out of that, other than there is possibility we do expect to see some currency strength in Japan for the week. We got the Governor Kuroda, he'll speak, and hopefully he'll put some hawkish speaking moments, you know, tonight Asian session and going into London session and the rest of the week. So we'll see how that goes. Tomorrow morning at 10:15, we got the Bank of England, Governor Bailey, he'll speak. That may have some significance on British pound. British pound's been beat up just as much as euro. We'll take a look at that. But I'm still bullish on a lot of the pound pairs and euro pairs for the simple fact, technically, they are well overdue, right? Okay, so that is basically it for Monday. So I don't expect to see anything specifically that is going to shake up the market on Monday. Monday is a very slow day. It's a very volatile day, very slow volume day. I don't expect a lot of movements in the dollar or anything else. But for the rest of the week, it's going to be interesting. So starting on Tuesday, we have nothing in basically the London session, but come New York session, 1 p.m., the governor of Bank of England, he's going to speak, and it might be something he may say. Hopefully he can be more hawkish in the discussions with the British pound. That will make an impact in the intended direction that we're looking for when it comes to the British pound, and we'll take a look at that technically. But that evening, and this is 10 p.m. Eastern time, I think it's 7 p.m. Pacific time, and I think it's 9 p.m. Central time, there is going to be official rate increase expected for the New Zealand dollar. So that is going to push some strength in the New Zealand dollar. So I am definitely leaning into the bullishness of the New Zealand dollar. So the New Zealand dollar will be strong. So anything with New Zealand dollar crosses, we'll take a look at that. So we can expect New Zealand dollar to pick up strength and have a strength in Tuesday, and that probably will remain for the remainder of the week. Okay. Coming Wednesday, we have the big old CPI inflation data, right? Consumer price index data at 8:30. That will significantly move the market across all your dollar crosses, gold and BTC. Okay, so that's going to be 8:30 Wednesday. Expect the market to move on dollars significantly on that day. Okay, at the same time, around 10 o'clock later on, then we got the Bank of Canada rate statement, and they are intended to also increase interest rate. Now, with that interest rate, that for the Canadian dollar may be priced into the currency or the expected news of the increase, right? Meaning it may not have as much impact on that Canadian dollar as it's been strong and supported by oil, right? So that may or may not have a significant impact. However, that may cause Canadian dollar still to maintain its bullish strength, okay? And then later on that evening, we can definitely expect Australian dollar employment change. Believe that will remain strong. So therefore Australia will also remain strong. So I believe there is going to be some currency strength in both New Zealand dollar and Australian dollar, and also the Canadian dollar, okay? Depending on the CPI data, obviously our CPI has been very, very high. I do not expect our inflation to be lower. So therefore, I do expect this to be cause some impact on the dollar in I would say in a bearish stance, right? So hopefully just weaken the dollar as it shows or demonstrate that we are confirmed in a recession, or therefore inflation is high, okay? And that may or may not cause some significant movements in the dollar in the intended direction that we're looking for, which is to be bearish. We'll see it technically. You'll see what I'm talking about again. But other than that, I'm really, really neutral on the US dollar for the week, leaning towards the bearish side, okay? So on Thursday, we have the PPI, which is the producer price index. This is more of the finished goods of how things are going from a producer standpoint in terms of goods and services that they're paying for. So we'll see. That may not have a significant impact as the CPI data for sure, but of course, we've been pretty solid per se and anything greater than the forecast is supposed to be good for the currency. But I think the CPI data will overshadow anything for the dollar, and basically just kind of can be a continuation from Wednesday. Okay, so that'll be Wednesday and Thursday. Of course, we have some unemployment claims. So there's some key reports of economic health for the US dollar that will, I don't think it's going to have a significant impact in terms of changing the dynamics of whatever the outcome is on Wednesday, the day prior. Okay, then we're moving on to Friday, which is the close of the week. And this is the core retail sales that will have some impact on the dollar. Again, I don't think it is going to have a significant impact, whichever the CPI data comes out on Wednesday. Of course, anything greater than the forecast is supposed to be strong for the currency. But as you can see, last month we were actually worse. So I do continue to expect core retail sales to be lower, right? So less spending due to the high inflation, right? So that might have some significant impact. And then we have the preliminary University of Michigan, it's just another economic data that they kind of use, the University of Michigan data for their, it's more of a survey of financial confidence of the economics of the economy. I don't expect anything significant out of that. And that would tail off for the week. So basically the key thing for this week, again, just kind of summarize, Tuesday, we got the New Zealand dollar bank rate for the Reserve Bank of New Zealand. And then we have the CPI data and the bank interest rate on Wednesday for Canada, and then USD for CPI. Then we got Australia employment data the same day on Wednesday, and then tail off the rest of the week for PPI data and CPI data. I mean, the core retail sales data for USD, okay? Next week, just kind of give a quick forecast of what we're looking for next week. I don't expect anything else other than the Bank of Japan when they have a significant issue. This will be a big one right here. The euro, for sure. Next week, that is expected to have increased interest rate for euro next week. And then the week after that is for the United States, FOMC. On July 27th. So next week would be Euro Central Bank. The week after, which is the last week of the month for July, will be US. Let's see if there's anything else for next week in terms of central banks, other than we got the Bank of Japan outlook. So Bank of Japan, and then also the Euro Central Bank's increase for next week. Yep, I think that's it for next week. Okay. All right, let's go to the charts and let's see exactly what is going on. Okay, so as usual, we'll start with the dollar. Let me know if you guys can see my chart. I'm just going straight into trading view here. You guys can see it. So this is my last week forecast, right? So we had looked here. And we have this move here. And then we expect it to have some type of a double top and then come down. Well, that did not happen. And I left that there for people to, for you guys can see what we talked about last week in terms of what we expected to see and what actually happened. It's pretty clear that price actually came here. It did come down, basically touched this previous structural low and then shot up, right? And it went as high as 107 before it pulled back down, right? So this is the dollar index in terms of the currency strength of the dollar. And let's take a look at a monthly level. And we can see that the dollar is at a very key level here. And let me mark this up right here. This is a very key level at price 109.84. Okay. Now, one of the most important things that when something like this happens, we have to take a look more of a macro look. So we have to kind of step back and go monthly, right? So what I just showed was a daily. Now we're at the monthly level, because now we have to take a look and say, okay, what's realistic of the US dollar now that it broke what we had estimated to be, you know, the peak right here at 105, which is where you see this white mark here that's already marked by this indicator for the smart money concept in terms of the weekly high, and it broke that. So now what's next? What could happen? Because we have a lot of gaps. We have a lot of gaps, and this market is clearly imbalanced, okay? So this right here, obviously is no longer valid, okay? But we're still in the support, we're still in a very high supply demand area. And we're not too far away from this key level here of 109.927 from a market structure standpoint. So let's go back to the higher level on to the monthly. And what's possible for the US dollar? What could happen? Because here is the swing high of this particular monthly chart. And let me go ahead and mark that up right here. So we have this structure here where price came down, pulled back. So we had a lower low, lower high, and then came down. So we'll mark that lower high as a structure there, as a level of, let's say, resistance now becoming another part of a resistance here. And we have to make that a key level for the simple fact that that is a level where price was manipulated, and it's probably for a key reason, like back here in 2001, right? And again in 2000, no, I'm sorry, this is back in 72, this is back in 74, right? And then over here as well, and let's see here, this is back in 86, and there was some key since looked like a very slow break, and it looked like it came back and retested here back in 82. So this is a significant key level. So because the price broke this level here, this is basically a next level target that is possible for the US dollar to reach. And if we throw the fib level here, and let's throw a fib from this swing high and this swing low of the market, right? If you look here, we got the swing high of the market there, and let's talk at the bottom of the market on the monthly chart. So if we throw the fib on there, go the other way, sorry. Okay, so you notice that we're now in obviously clear premium area, right? This is our premium zone, this is our discount zone. So anything in this green area is where you should be looking to be bearish, right? Where you should be looking to sell. You should not be looking to buy in this area, right? And if you're looking to buy, then you're looking to short-term scalp, which I would be looking to short-term scalp depending on where we're at from the market. But overall, we're bearish, right? This is a bearish market structure to say that the market is going to go up at a certain level, and it is definitely looking to correct, to rebalance itself to this level. Look at all this imbalances here that the market has to be balanced, and it'll rebalance itself. So there's targets here, and there's all of this imbalances as well, right? All of these targets are parsable, right? And we don't know exactly where it's going to go until it reverses, be able to determine. But there's key important levels that I want you guys to be able to notice, right? We got this 50 level. This next level right here is 618. You can see a line, but you can't really see it there. It's kind of hidden. Let me see if I can extend that out more. So we have the 50% level right here, which is in the premium area. This is our discount zone. And as price has now already exceeded our 618 from a Fibonacci perspective. When we say Fib, we say Fibonacci, short for Fibonacci. But here's the next target. We got 786, and we got the 886 before we reach 100%, which is low probability. Medium probability of reaching this level. And this is now a very high probability, right? So we have to operate on probability. And this 786 level, which is this line right here, which is kind of ironic because why? It happens to be right here at the same point where this yellow line is at. So we have the 786 level and we have this yellow line at this key structure here. So it is likelihood that price for the US dollar could be looking to be a little bit more room to the upside. That is potential, right? Anywhere in this area is reaction points. Anywhere in this area, and it's more of a zone, right? Because we have price hit low here, and we have price hit low high there. But there is a reacting point, a key reacting point for the US dollar, okay? Now, what I can tell you is you're bullish, you're not gonna be going far, right? And most likely you could be manipulated, that price can turn on you at any time. So from a higher probability standpoint, if you're going to take a chance on the dollar or trading against the dollar or with the dollar, you're better off from a probability perspective being bullish on the dollar, which is where I'm looking at right now, for the simple fact that we have this key level. Now, having said that, you know, a lot of people can think and say, well, okay, that's fine and dandy. You can see it there, but what's to stop it from, you know, going at the 886 level that you pointed out? Let me put that back up there. All right. No, what's the likelihood of price, you know, continuing, going up past that level? What if it can go past this 786 level? What if it goes to 886 level? What if it goes to 100 level? You know, what if it goes higher than this? You know, there is a lot of what ifs, and that is true. And when it comes to trading, we don't trade on what ifs. We trade on probability. We trade on probability using the tool set and the toolkit that we have as traders, right? Using Fibonacci's and moving averages and key levels and order blocks and imbalances, and knowing the history from a price action standpoint, what a reacting level from a high probabilistic opportunity where we should be trading and how we be positioning ourselves. So we could be in this whirlwind of the US dollar a little bit longer. That is possible. Now, it's not something I want to hear. It's not something I'm looking for, but it is possible. This is a great possibility that we could be in this little bit of a storm here with the US dollar just a little bit longer. That is a possibility. And I got to be able to trade and be ready for that. And the only way you're going to be able to do that, instead of just exiting out of all positions and say, oh my God, I don't know which way it's going to go, we have to play on this and be ready, right? Because the worst thing you want to do is close all your positions. And then the next thing you know, it reaches here. And then guess what? Boom. All the way back down to 50% of what we're expecting to reach on this daily swing level. And then you're going to think, well, all I had to do was switch way a little bit longer. Yeah, but you wanted to get out. Nothing told you to get out. If we were already looking bearish and we've been selling since here, you just got to be a little bit patient because it's coming. The market is going to correct. The market is going to balance itself. We already know that. It just went a little bit higher than expected. We're in an unprecedented market. This is not normal. This is, we just exceeded the high of 2020. We exceeded the high of 2017. We're now approaching the high of 2002, 20 years ago. The market has been in a bearish market this whole time, and it went bullish, bearish during, Trump time. Then it went bearish. I'm thinking this is more 2015 Obama around this time, and then it kind of, his second term kind of went down, and then around 2018 we have this push up on the dollar. Trump was in office, and towards the tail end of Trump, it came down, right? And now that Biden's in office, we've been bullish for the last 3 to 6, 8 months, for the last 12 months, right? Since Biden's been in office. But we all know inflation is high. We all know this is inflated. And if you don't know, fundamentally, this is going to crash, right? And the question is not if. The question is two things. And this is the reason why I'm spending this much time on the dollar, because this is a very key leading indicator of what's going on in the market that's going to have an impact on both, not only Euro USD and USD CAD, USD Chef, and all the USD currency, but also gold and also Bitcoin and the indice market, okay? So there's two things that we are looking here is when, right? Because we know the other question before this one, which is actually was one, but we don't need that to be one, is which direction, right? It's looking bearish, but we are reversion traders. We are knowing that we don't buy the highs. So we know it's going to be a bearish market on the dollar. We know it's going to turn, right? So this one we do know that it is going to go down based on our experiences, based on our training, based on what we know of the market. And if you don't know, we got to, you should be, coaching students should be training this, right? Other people may be looking at this and going, that's an uptrend. We should be buying. Well, that's why they're not traders, right? So the quick question that basically, because we know it's going to go down, is when. And then the second question, which is a better question, and I love it, is how far? How far is this going to go? How far? How far? Because if you get out all your positions now because you're in fear and because you're in a little bit of a drawdown, and it does correct, and all of this pays out and more, you're going to be more of a hurt than you are if you decide to get out now because out of fear. Okay? So that's the dollar. So we're looking at possibly at this level here, there is a possibility at 106.8, 106 could be, let's see, 106, even as much as you can go like 106 to 107, right? To kind of make it a round number. Let's say 106. I even go, let's see, as let's say 107. Just kind of go as a round number. Ooh, not that low. Let's see, it's up here. 110, sorry. Let's say 110 even, right? This is the psychological level of where we can see the dollar going to 110. That is a great possibility that it can go that far. Now, it can correct at any time, but it can go that far. And this is based on this level here, what we've talked about on the Fibonacci level, retracement level of this level here of hitting 786, which is a very good confluence to say that this is a very good point to where we'll see some reaction on the US dollar. And then, of course, that could be around, the central banks, FOMC, the Fed's announcing their interest rate. This could be the point where the Euro central banks announce their interest rate the Bank of Japan policy announcement. All of that could be just a perfect storm to really make an impact on what could happen with the US dollar at that point, as well as the gold and also Bitcoin. Okay. And then, of course, the stock market. And we'll talk about that in a minute with the indices. Okay. So this is dollar. I'm looking bearish on dollar, but we're going to need some key level here to be significantly watched. So go to the daily, and I'll stay on that particular part and keep my bib there. This is the daily market. We're looking for key breaks, right? If the market comes back, if it keeps going up, then we're targeting this level, okay? If the market corrects now, right, this would be the key structure right here where I need to see price come back, which is 105, 105.5. If we see key levels of any corrections of price of the dollar showing some signs of pulling back, then that's going to be an early sign that we can say this is not going to happen, and this is most likely going to happen now. Okay, so there's two scenarios that price could go before it comes back. Okay, either way, the good thing is we are looking at these two scenarios happening, and they are both doing what? Going down. Okay, so that's how I'm trading it. This is how I'm playing it. And, could I be right? Yeah, it could be. One of these scenarios be, or I can completely wrong. Why? Because I do not have the crystal ball to the market. I don't. I wish I did, but I don't. Right? And because of that, I have to rely on what I see technically. And those are the clues that I'll be looking for. Okay, so that being said, let's go ahead and go to, let's take a look at one more thing from an evidence standpoint. Let's look at the bonds. Let's look at the US 10-year Treasury, just see what we're looking at. Okay, so this is a key sign here. So we see some bullishness on the 10-year Treasury bond yield. And why are we looking at bond yield? Because bond yield is correlated to the dollar, right? If bond yield goes up, that means dollar is going up. If bond yield is going down, that means the dollar is expected to go down, right? I'm not talking about bond prices. There's two things. You got bond prices, you got bond yields. Yield is correlated to the dollar. Bond prices is inverse correlated to the dollar. So if bond prices goes up, that means the dollar is going to go down. If bond prices go down, that means US dollar is going to go up. Okay, hope you guys got that in your notes. As of right now, we see got 3 strong days of bullishness of the Treasury yield. But the key thing is, which is kind of unique here, is that we got this key structured level on the bond yield. So that means there's a great possibility that we could see bond yield do this, right? And if that happens, then we are most likely going to see lower prices depending on how bond yield reacts at this level. And if this happens, we got a classic pattern here called left shoulder, head, right shoulder, also known as left shoulder, head, right shoulder, or head and shoulder pattern on the bond yield, which is a clue that we could be seeing potential bearishness on the dollar coming soon. The key point is what happens is at this level. We need to see, and we need to see how bond yield reacts over the course of the week. Okay, so this is bond yield. Let's go to gold. I'm on a daily here. So this is a very good, interesting point here in gold. I'm gonna pull up the weekly so we can take a kind of a macro look at gold here. Now, there's a couple of things here that we're looking at. And I will say one of the things is an order block that's not really pointed up. And this is about right here, right? But we have this massive push down and this push up and just took off, right? This is a classic example of an order block move of an institutional candle that was designed right here and pushed up and created all this imbalances that actually was rebalanced. And then we have a lot of price reactions in terms of rejection at this level, right? So with that being said, look at where price is at right now for gold. Like that, right? It's right here at this level, just like it did here, just like it did here, okay? This is a really good key sign that we have a very strong demand support level at this point, right? And I'll say strong because we have a lot of key weekly, not a daily, not a 4 hour, not 1 hour. And the significance of those lower time frame is that the lower the time frame, the weekly of the weakness of or unreliable this zone can be. But when you're looking at it from a daily, especially on a weekly and a monthly level, there's a very, very, very strong level, just like here. This is weekly, and look what happened here. Price went up. We've seen this happen right here, came down, and then over the course of the years, right? This is from 2020, and then 2 years later, guess what happened? Now, why didn't it go up? Right? And this is on a weekly time frame here. We're looking at a weekly time frame, 1 week. This is a weekly high. And it came back up here again. Why didn't it go up? Now, if you were trading up because this is all you saw and you were thinking that it was going to go up, you're not paying attention to price action. This is a very key level on a weekly chart and got slammed down. And this is the price when it shot up because of the Russian, when they invaded Ukraine, it shot up and people thought it was going to keep going up. So they were buying up and they got liquidated, got holes, okay? So this is why this is a very strong key level when I'm talking about from a demand standpoint when looking at these key levels, okay? Now, that doesn't mean that gold prices can't go a little bit down, right? Because we're in a zone. This is a clear zone. Price is not exact. This is a zone. Came here, came here, came here, came here. It was all within this level, which we call the demand support level, right? So anything in this level, you have a higher probability of price doing what? Reversing, going up, okay? So I'm bullish on gold, right? I gotta go right here, right? I had to get rid of some gold prices up here because it's very unlikely that we're going to see gold prices come up here in the near future. So I want to get a better pricing. So I close up some lower position here at a loss to get some better position here to get an up opportunity for profit taken in the short term instead of waiting for the long term. It's my account, to be honest with you. I would wait as long as it freaking take. I don't care if it's 1 year. I don't care if it's 2 years. I'm not going anywhere. This is what I do for full time, right? But for the short term, I didn't want to wait 1 or 2 years, especially if I got clients holding on, right? So what I wanted to do was, let's get rid of some of this small gold positions here. I got to go buy here, and I got to go buy here, and I got another one here. Right, the likelihood of price coming up here anytime soon within the next year is going to be very unlikely, especially when it took 2 years to get to this level. Do I think price is going to go up there? Absolutely. I do believe it's going to go there. But for it to go up there, I need dollar to drop, right? Because when people are not investing in the dollar, people are investing into gold. And plus, especially when gold is an inflationary safe haven currency to put into, or commodity to put into, it's metal. So I am looking for gold prices to go up. We got a lot of imbalance here. We got a lot of imbalance here. Now, not to say that, again, we can see gold do this, we can see even gold go down a little bit more before it goes up. The good thing is I'm bullish, right? And if it goes down again, I am going to buy one more right there. And if it breaks right there, then I need to look into hedging. This is my hedge zone, right? My damage control zone right there. It goes there, then I need to start putting my damage control on my hedge plan, okay? The likelihood of this going there is very, very low. I don't see price going that low, but if it does, this is the next target. And that means gold is just going to go, dollar is just shooting higher than what we had estimated on what we just looked at, okay? So with now a little bit more bullish, gold a little bit more bearish, that's fine. Let's get it. And I'll be riding this thing back up. I'm banking on price action to tell me that with the high probability, just like it did up here, that I'm looking for gold to reverse. That's my story, and that's what I'm sticking to it. It breaks this. This is my damage control line. For those of my coaching students, you guys already know what that means. Damage control is right there. We're getting to damage control, hedge plan for gold, gold in the meantime, okay? One of the things that I am going to do a little bit different is I have a very good gold expert advisor that I actually run on my other account, right? So I have multiple accounts, and one of my other accounts, I got this expert advisor. I've had it for quite some time, over a year, and it produces about one, maybe a little bit, sometimes 2% a week. It's it's nothing significant, but it can generate anywhere between I've seen as much as about 8% in a month on just gold. So what I'm thinking about doing is I probably will employ my gold expert advisor bot, which gets managed, right? And it just trades gold. That's all it does. But it trades gold when it ranges. It does very, very good. But when it takes off, is when it goes very, very bad, right? So I gotta watch and manage it so it doesn't go crazy, because it does go in a little bit of a grid style, kind of a grid martingale, right? Now, martingale, technically, if you're manually trading martingale, that's horrible. But if you're using an expert advisor bot that does a little bit of hedging with grid, and it has a very good correction, recovery mechanism, and an expert advisor like mine does, it does very, very well. Haven't lost. I lost like 4% one time, but that's because it was up already over 50%. So when something is up over 50% and you take a 4% hit, tell you what, net, you're still up. So I probably will employ the gold bot onto the live account. So that is going to help with the add additional 1% return, maybe 1.5%, 2% per week. Of course, it works best for higher account size. I would say at least $10,000 on up, for the simple fact that it does do a little bit of a martingale and hedging grid style recovery. So anything less than 10 grand, it probably not going to see as much profitability, even though they will see some. Like they will probably see more close to 0.5% to maybe 1% a week, but everything else. So I probably employ that this week, and just to be able to get an opportunity to scalp gold in the short term while we're waiting for this whole mess of the market to turn around. So I'll be looking for that. I'll be looking for some of the key coaching students to see some of the results and see how that's going from a gold standpoint. So I'll probably turn that on and add this to this account. And it's been doing great on my other account. In fact, it'll pass a prop firm. Let's put it that way. If you have like a $250,000 prop firm account, it'll probably pass that. So one of my partners are looking to, we're not sure if we're going to maybe make that available product, right? So that is something we may do. So I may sell that as a separate product, because there's a lot of people that I think I can help with that bot, especially if it just generates and just continue to generate anywhere between 4 to 8% return a month. And I'm telling you, 4 to 8% return on a $50, $100, $200,000, especially if it passed a prop firm on automated. I mean, the bot's probably worth $5,000, to be honest with you. And I spent maybe a little bit over $2,000. So it's a very good bot. So like I said, it's been going great for me on my other account. That's all I have running. It's run goes, and it does great. So that is one of the things that I'm looking to add here. Okay. So we'll see how that goes. I'd love to hear from feedback from Gene, maybe Brad. Let me know how that's going. I'll probably turn it on tonight. So you'll probably start to see gold trade. Small gold trade, you might see a lot of gold trade. It may go in a little bit of a drawdown, or going to be a little bit of recovery, but I'll be managing it, right? So if it gets a little bit out of hand, I'll continue to manage it and cut it off, or take small losses. But you'll see how it goes. So I'll be looking to turn that on to this week and let it run, see where it goes. Okay, so that's gold. So I'm excited about that. So we'll see how that goes for everyone. And that's what I'm looking at for gold. Okay, so those are key levels and key points for gold. Let's go to the indices, and then I'll throw Bitcoin in there in a minute. Okay, so this is my sketch. As you can see, I'm going all over the place on indices here. Okay, so let's take a look. So we're looking at monthly. So this is the monthly chart on S&P, right? Which is where a lot of people's 401k and IRA are located at. Right, so a lot of people who are in the 401k and IRA were watching their accounts, right? So if you guys look at this, right, this is the monthly chart, okay? And this is, let's say right here, this is 2020. And obviously this is a very clear bull trend, right? Like from this drop right here, right? We all know what happened in February 2020, right? This is when the whole COVID lockdown for the United States was announced. And then boom, we had that big plummet down here to this level. And then since there, from 2020 April, we've been on this steady, very strong expansion and bull run up here to this market. And then we have our famous monthly indicator of what we call tweezer top. Very, very, very key candlestick pattern, right? Tweezer top. This is the reversal candlestick pattern. And when you see it on a daily, weekly, or monthly, it's a very, very, very strong indication of a reversal, right? But that's just a candlestick pattern. We go off a much market structure, which we saw right here, and we had a very clear change of character reaction right after it broke that, and it did break down, which is right now saying it's a bear market correction on S&P 500. Now, for the last 3 months, you can see here, it's been, bearish. Well, guess what happened for the month of June? Or I'd say, well, this is beginning of July already, right? So this is July, this is the whole month of June, this was May, and that was April. So from March, boom, we've been tanking, right? And we've already plummeted from the top of this market. We've already plummeted over 24, 20% of the market drop. Now, a bear market correction normally goes about 35%, right? And it lasts for about a year or two, right? But I can't call this the bottom, and I won't, right? Because we're now in bearish territory, which is good, right? And you can see down here that, let's see. So we were very, very overbought, right? This market was very much overbought and inflated down here on our relative momentum index, right? And then we have price just fell, and it crossed over from a bullish sentiment now to a bearish sentiment, to where now sellers is clearly taken over, right? Now, our 50% level, believe it or not, it's not till right here. This is where our 50% level yet. So we're not there yet. Yeah. So that tells me that we still have a little bit more room to the downside, right? And I would expect to, unfortunately, would want to see or need to see just go a little bit lower before we can even say that, we're going to see a market reversal. Now, that could happen. I'm not going to say it won't, because look at over here. We had this market down and it crashed like crazy for like 3 months. And everyone thought we were in a bearish market then when the COVID situation happened, but it didn't cross this 50 line. And then we went on to this bullish trend. So I won't say we're clearly in the bottom of the market until this crosses the 50 level of our relative momentum index. So it is very, very likely that we could be seeing this. That is possible. However, as you guys notice, what color we are, still red there. It has not converted to green yet. Even though we have this first week of bullishness, this line, this relative momentum index line, has not turned green, right? So when it has not turned green yet, this is telling me this is still bearish, even though we had 1 week of July. So I need to see at least another week or 2 weeks before we see either a continuation of this red line, or we may see a glimpse of green on this particular line on this monthly chart, okay? So this is what I'm looking at right now. So this is S&P 500. This is a key level of where I was looking at, this key order block. It's right here. This order block right there. This is a key level. And I'll mark it here. All right, this is the level I was looking at, to where I'm seeing if the market continues, this is where I'm looking to where it can come down to. Now we may see, hopefully we'll see a correction here, and it can come back to this previous high. This is in the supply area, right? And I'm looking to see if it's going to come down, or is it going to continue to go back up? So we don't know yet. All we do know is that we are in a bearish looking market right now. We are bearish. This is a full correction bearish market right now. What we don't know if it's going to be a correction, and this is about as low as we're going to see it, right? Which I think we all would be pleased to see if the market, the health of the S&P market can correct and come back up. Or are we going to continue to see more bearishness, right? And of course, if we see the correction of the market goes up, that means the dollar will go down. So the stock market is inverse correlated to the dollar. They're not highly correlated or uncorrelated, but they are closely inverse correlated, okay? So if the stock market goes up, that means dollar is most likely going to go down for most of the time, okay? If the bearish market of the stock market keeps going down, then we could still continue to see more strength in the dollar. This will be a very good telltale tale of what's going to happen of the CPI data, right? So when the CPI data will be a key tell of what's going to happen when the CPI data comes out this Wednesday, and when the Fed announces the interest rate next week. We would definitely be able to see what's going to go on with this market, okay? June, you said on the daily chart was just before the previous high. Are you talking about for the S&P 500? Okay, let me see, I'm going to the daily. Yeah, because I was going to go down to the daily, so bear with me 4 minutes here. Okay, so we can see the classic, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And we have this lower high, and then we have this lower low. This is a very good key point there. Let me go ahead and mark this out. We got this trend line here. So very good. No key. Okay, so this is a very good point, Gene. We did come back to the same high on the daily. So we're right there. So we did come back to the previous high, to your point, and which is good. Now, this is the key part that we need to see evidence of, right? Are we going to break out to the upside past the previous high, right? This is a previous high level. And are we going to go down to this is the previous weekly high. Again, we got a previous weekly high, and this is a previous daily high. This is daily, this is the weekly. So we're just about breaking the previous daily high, and it looks like we're going towards the previous weekly high. This would be a key deciding point to see what's going to go on with the market. If it breaks this, I'll be looking to trade this going to the upside. And I'll be looking to do that for sure. If we do not see this and we see price break out from the previous daily low, right? This would be my key point right here. You got the previous daily high, previous daily low. If it breaks out of this point right here, I'll be looking to trade it to the weekly low. And then we got the monthly low. This is the weekly, this is the monthly, this is the daily low. This is the daily high, this is the weekly high, and this is the monthly high. Okay, those are key levels there, and this is a very key points in the market structure to be able to say how we're going to trade this. Because right now, to Gene's point that you just pointed out in the comment, that we are looking at the previous daily high, we are looking at the previous weekly high, which is great, and that could happen. If it happens tomorrow or Tuesday or Wednesday, then the breakup to that is going to signify that we are looking for possibly correction, right? And we may be at the end, can't call it that until we pass this level right here, which is the monthly high. But we could be seeing a correction for now, not so much of a reversal, but a correction to the monthly high. If it breaks this weekly high, it's going to the monthly. If it rejects the weekly high, it's going to go to the daily low, right? That'd be target number one. If it breaks that, it's going to go to the weekly low. If it breaks that, it's definitely going to the monthly low, and we could be looking to go to the other end of this channel and then do more downside. Okay. The good thing is that we are, green, but we're still in bearish territory, right? We're below here of our line here. This is the 50 level line of our relative momentum index. We have not correctly crossed over the 50 lines into getting to bullish territory. So we're still in a bearish territory, and it probably won't happen until we cross that weekly high, which is great. But right now we do have a bullish momentum. We won't say we're looking bullish until we cross that weekly high and we cross that 50 level, which is going to be the both of our confluence. And then, because right now it could turn bearish at any time. So those are the things that I'll be looking for. I'll be scalping it in the meantime. But if it breaks this weekly high, I'll be trading bullish. If it rejects it, I'll be looking to trade it to the daily low, then the weekly low, and so forth. Okay. Now, if I were to throw my fib on there, and let's say we are looking here. This is a swing high of the market. This is a swing low of the market. Market goes up, pulled back, and it goes back. and we're right there where? At the 50%, right? So this is very an indecision area of where you could do. You really can't do anything in terms of trading because you don't know exactly which way it's going to go. So we're going to have to see the break of this particular level, which is the weekly high, or the break and rejection coming down to the weekly low, the daily low, okay? If it breaks this, and if this is the 618, then I'll be looking to see if it goes to the 786 and 886. It breaks this, and it goes up here, then we are definitely back in the bullish momentum, and the market is going to be in a full correction. So this is going to be a very key decision point on what we're going to see, and this is how we're trading it. Okay, that's S&P 500. If you look at US 30, it's, we all know the S&P 500 is the leading indicator for the other indices like the Dow Jones US 30 as well as Nas 100, right? Look at it. Swing highs, swing low. Right? Same pattern. We're at the daily high. We're approaching the weekly high, and we're at the 50%. Seems like the same darn chart that we looked at on S&P 500. Yep, they're all correlated, right? But S&P 500 is the leading. Then we got US 30, and then we have Nas 100, NASDAQ. So they're all both pointing in the same direction, as they both have different aspects of the market: top 500, top 30, top 100. Okay. So there is an imbalance here, which is I like to see it come up and get this level, which is exactly where the 786 level is at too, and it exceeds the weekly high. So I'm looking, I'm waiting to see what happens here, because if it breaks that, man, I'm trading that high. However, I am bearish for the simple fact that we've been in this bearish sentiment here, lower lows, lower highs, lower lows, lower highs, and we didn't create a lower low. So could this be the break? Or could that be a retest to create a lower low? It'd be more down here, right? We won't know until we see the break on that. So we're kind of neutral there. Okay, so we definitely need to see the break there, but there is some key significance here, and this is what we're going to be looking for during this week. Okay, this is great. So make sure you guys make a note of that. We're at the previous daily high. We're going towards the previous weekly high, which is right at that trend. We break that, we're going up, and we're going to definitely go towards the previous monthly high, if not at least to this imbalances of the 786, because what could happen is it could still come down. Okay, until we break this level and this level, we won't say it's a correction yet in the market. Okay. All right, let's go to Bitcoin real quick. Nice. All right, Bitcoin, 28.6. All right, this is it. Look at Bitcoin. This was that key level there back in 2017, where price was at 20 grand, right? And then we all know that hysteria back when Bitcoin hit 20 grand for the first time. If you guys don't remember, I do. It was great. And then it went all the way back down to 6,000. That wasn't so great. And it went even lower than that. And I remember that. All that hysteria, bubble pop, and everyone thought Bitcoin was dead at 3,000, right? I'm sure you guys all remember that. Went up to 20 grand and it came all the way back down to 3,000. And then it went back up. We had a couple of, halving, and it finally exceeded the 20 grand back in November 20 of 2020, not too long distance ago. And it shot way up to 69 grand, damn near 70 grand, and then it tumbled almost 70%, right? Did it go 70%? I think it did. Let me take my measurement here. Yep, 72%. Yep, 72% reduction in the bearish market. And literally, right? In literally 385 days. So just over a year for it to show a 72% reduction. Could this be the bottom, right? A lot of people are saying that it could go lower to 10 grand. I doubt it, but I didn't even see it go this low, right? But this is a very significant level. It could. I hope not, but it could. And if it does, guess what I'm doing? I'm buying more. You better believe it. I'm buying more, right? So Bitcoin ain't not going to go to where we got a lot of adoptions in Bitcoin, and obviously futures and everything else is banking on Bitcoin. You're better off holding it. So there is going to be some great upside when Bitcoin barely gets to back to, let's say, just 10 grand. That's going to be 51% of your money right now, just by going up to 10 grand. And then we all know it's going to go to this level here, which is to 20 grand level, right? $20,000. No, not 20,000. What's that price? Sorry. That's a $20,000 increase. Back to this level here around 38, 39, close to 40 grand, right? So 20 grand, obviously going to 40 grand of Bitcoin price, that's double your money. Right now, if you are not buying, I would buy and hold and wait till that bad boy gets to 40 grand, and that's double your money right off the bat. So if you put $500, you got $500 worth of Bitcoin, you're looking at 1,000. You put 5,000, you're looking at 10,000 by the time Bitcoin just goes to 40 grand, right? It's already at 20, 21.9, right? So it's been bouncing here for the last 2 to 3 days. Now, could it go lower? Yeah, absolutely. But I don't think it's going to go any lower than this here, which is 10.9, if that. I can't barely see that. However, I'm already looking long here. I've been looking long since here. Hell, I took a test trade here, and then I've been long here, been long there, been long here. If it goes down, I'm going to go long again. Okay. So we need to see what's going on with the stock market. Obviously, if the stock market, which is where it's been correlated lately, next level, obviously, where we're looking at 30,000. This is where I want to see Bitcoin, right? 30,000 is the target for what we need to see Bitcoin going to, okay? That's a key level of target for Bitcoin. I don't see Bitcoin coming low, but if it breaks that level, this is the next target. It just will come. Okay, we can bank on 11 grand if Bitcoin breaks this level. Obviously, we got a very strong weekly high. This is a very weekly high candle. Let's go to the daily. This is what we're looking at. We have Bitcoin come up, come down, and it haven't come down yet. Okay, so over the course of the week, 1, 2, 3, 4, 5, 6, almost 7 days, we have not seen Bitcoin come down lower than 20 grand. Okay. So as long as Bitcoin holds above 20 grand, we can see Bitcoin breaking the previous weekly high, which it looked like it already had, and go to the previous monthly high. This previous monthly high target is 32 grand, okay? Again, this is the, let me zoom here. This is the previous daily high. It already broke the previous weekly high. This is the previous week. This is the previous day. It already exceeded the previous day from yesterday, right? Which is good. All good signs. Anytime you have any signs that says, hey, I broke the previous weekly high, previous daily high, you guys know what knows next. Right here. Previous monthly high. And that previous monthly high for Bitcoin, 32,000, okay? So that's our target, and that's what I'm seeing. Everything is looking good for Bitcoin to be bullish. If you look down here on the relative momentum index, we're looking bullish, okay? Looking really good. So we got to cross that 50% line. I think once we cross that 50% line, that's going to be really good for Bitcoin to say we're now in a bullish market. We're in a bearish market, but we got bullish momentum in a bearish market. Okay, hope that makes sense. All right, let's go through currencies real quick. So start with the Euro USD. Let's start with the yen. Let's start with USD JPY. Let's start there. Okay, yen crosses. Yeah. Woo, look at this mess. Look at that. How imbalanced is that? That's the most craziest imbalance I've seen in the history of the yen for me. All right, let's go to the monthly. Look at that. What the hell is that? You know, we're going to keep buying? You just don't keep buying that. I mean, you want to buy, you should have bought down here, maybe right there. But you can't buy that. You had a previous weekly and monthly high. That's crazy, right? Let's see if I can get a better pricing data here. Let's go to Saxo Bank. Look at that. So we got previous high here. This is the Saxo Bank data. So just give you more historical data on TradingView here. I'm trying to line this up down here. Okay, good. So we got historical highs here of 2002, obviously 20-year high for the yen. And we got a very key level here for the yen. Let me mark this down right there. And that is 147, okay? So I think that's a key point, because what we got to say is that is a high level of 1998, and then the highest level there is 1990. Wow. Hell, anybody know what they were doing in 1990? I think I just got my first marriage. I got married in 89. Yeah, 89 was my first marriage. 1990, boy, the 90s. Anybody remember the 90s? That's awesome, right? Awesome time. Okay, guys, so it's just kind of, when you see historical prices that way, right, this tells you that this is a very unprecedented, location for price without, balance, okay? It's nothing wrong with price going this high, but when you have a huge imbalance like this, there's no correction there, okay? So the market makers who pushed us up, look at all those bullish candles with no sellers. Market makers and central banks, so the big banks, the big boys, they're much in drawdown just like anyone else is, right? We graduated in high school in 81. Woo! Nice, nice. You were just experiencing your 30s probably in 90. So this is a very interesting point, and this is neat. This is I'm telling you guys, anytime, right? So I'm going to give you a little bit of mindset. When you see something like this, if you are not getting excited, something's wrong. This right here is an edge. This is sell all day long. Right? Hell, I've been saying that since when, right? 1, 2, this is a monthly, 1, 2, 3, 4, 5 for the last 5 months. You guys know, every time we talked about USD, I've been saying what? It's been a sell the whole time. I know. It's true. It's still a sell. It hasn't changed. The market is definitely it's bullish, obviously. Yeah, it's bullish market, but it's a bearish setup right here. It's coming. I know it is, especially, we just saw it on gold, right? You guys saw historically what happens when the market get this high, right? And it's overbought, way overbought, right? But when you're looking at historical prices here, and you look to the left and you look at 2002, okay, it exceeded that. It's looking to go here, right? Not that we wanted to, but it's a great possibility that it could go to 147. That is a possibility, right? I'm already in damage control, right? That means as soon as it comes down here, I'm hedging it, okay? I got a hedge sitting right there, and I got another hedge sitting, right there. Right? You don't want to hedge the high. That's one thing you don't want to do. We talked about that as coaches. I got another hedge sitting right there. If it comes down, I'm hedging it. It comes down again, and hedging it. It comes all the way down. Then I'm a net close this out for a profit. This will pay us. This is money in the bank, and all you got to do is just be patient. Okay, price goes up. Not that I want to, but we're gonna have to hold it. We have to hold it, especially when you know it's coming. I know it's coming, right? It's one of those two questions. It's a matter of when and how far. I'm loving this setup. Okay, look right here. It was high. Where did it go? Went down. Look how far. Look how far it went up. Look how far it went up. Imagine what happened back then, right? We were in high school, right? 97, 91 for some of us. Maybe some of us already graduated in high school, was in college. Market, I don't remember that. I wasn't trading then, right? Market went from here all the way up. What do you think they were thinking when price went up that high? Oh my God, it's gonna go higher. Did it? No, it went down. And it created a very strong low, and then it went up, not as high. Then it went down, right? Created low, then it went up, and then this is when people was going probably nuts as well. It's when price came all the way down and it broke this low, and they're like, "Oh my God, it's going to go lower than this," and it did. Oh my God, it's going to keep going, right? But it was already oversold, and it corrected, and it went to this high. Oh my God, everyone's breathing. Then it came down. Okay, that's nice. And it came to this equal low, right? And it came up, and people thought it was going to come to this previous high, like me, and it broke. Oh my God, it's going through the roof. So wait, calm down. It just exceeded this side. This is next side. Okay, so we have to be patient because we want this move just like we saw this move here. Guess what? It's coming. Now, me personally, I'm not saying it because I wanted to come down. I'm looking at history. I'm looking at price action. Okay, I'm looking technically. Okay, this is what I'm looking at. This is what tells me, this is the evidence. Over here, when it was this high, it went down. What happened when it reached this high? Went down. What happened when it reached this high? Went down. What happened when it reached this high? It went down. What happened when it reached this high? It went down. What happened when it reached this high? Come on, guys, you tell me. Am I deceiving me? Or should we be buying here? Because we think it's going to keep going up? No. Right? But you can't make that determination without understanding price action, without reading the charts. Because when you're just looking at balance sheets and you're looking at your P&L, of course, it looks horrible. But it's going to be so much better when it comes back down, right? Of course. But technically, that's all we need. That's all we're waiting for. Okay. Now, when we're talking about the yen crosses, let's look at other yen crosses, like, for instance, Chef JPY. Look at that. Horrible, ain't it? Saxo Bank. This is Saxo Bank. This is the history of Saxo Bank as far as I can with Saxo Bank. This is the ceiling of the market. Exactly, history repeats itself. This is the bottom of the market. This is the history of Chef JPY all the way back down to 1986. Okay, when June was a freshman in high school. No, you already graduated, right? So you already graduated, you're in college or trying to figure out life. Sorry, you graduated in 81, so you're well out of high school. 86, right? I think I was in high school then. Yeah, I was just in high school. I think junior. Yep, right here. So I think this is the monthly now. College trying to figure out life. Exactly. There you go. Now, this is the ceiling of the market. This is the bottom of the market. And we got Chef JPY go up. What the hell do you think is going to happen next? Well, let me give you a clue. What do you think happened there? Are we there yet? Now, this is not to be scaled. I don't think because it's up here, it just need to go to the same level. No, it doesn't. It's all momentum based. This is momentum, okay? This is it, it's already there. In fact, if you want to scale it up, this is higher than this, but it doesn't look like it up here. Of course not, because this is just a push up at that time back in 2014 for whatever happened, right? I wasn't trading in 2014, I didn't start trading till about 2015, end of 2015. This is it right here. What do you think we should be doing? Ooh, you should be doing nothing but selling, because it's coming and it's going to come just like that. Just like that. The point is, how low? Reloading, Brad. That's right. Now this is a monthly. Let's look at the weekly, the daily. Let's go down to the daily, because the daily is going to give us a little bit better clue. This is looking really, really good. Oh my gosh, look at that. The bearish move has already begun. Have we broke structure for a change of character? Yes, ma'am. This is structure right here. This is a previous low. We broke that. We ain't coming back, right? If anything, we may do a retest, right? We may do a retest. I would wait for a little bit of a pullback, Brad. If it doesn't pull back here, wait till it goes down a little bit. And then wait, catch the pullback, right? If anything, I'll put a buy limit, maybe at this previous daily candle. I'll probably put it at this previous high right here. This is the previous high, right? It's already breaking the previous low, week low. It's already getting the previous low day. It's already broke that. It's a very good sign. It's already broke the previous weekly low, previous daily low. It is going down here, baby. That's it. This is the monthly, right here, monthly low. And what, lo and behold, look at this. We got imbalances here. We got imbalances there. It's got to get filled. Those are gaps, right? Fair value gaps. And what is this? That, my friend, is called demand, support, or support demand, point of interest, order block. Love it. And there's another one sitting right below it. That's right. All of this is going to get rebalance. Rebalance. Okay. Why we say that? Because it did that here. Woo. Oh my gosh, this is great. A double top, everyone. I'm loving this one. This is short. This is short, and I'm bearish on Chef JPY. This is looking really good. I love it. Okay, let's go to the next one. Let's go to CAD JPY. Okay, move some drawings here. Ooh, this is looking really good. Let's go to the monthly real quick. Oh my gosh, look at this, guys. Look, I'm just going to park it right here, right? And I want you guys to take a look at it. And we just already went over a couple, okay? And you guys already know, my coaching students and those who's already been with me on following the top down, I'm just going to point a few things and you guys tell me. Gene, you called it, Gene. I love it. This is great. Guys, look at this. Come on, this is textbooks. This is textbook stuff right here. This is all my coaching students know this. This is textbooks, guys. Like that? This right here is an anomaly. Okay. I don't see price coming that high of 2007. No, I don't. However, there is key levels, right? There is a key level there, and there is a key level there. Those are very likely targets, okay? However, this is very, very important, and this is my coaching students, and this is a coaching student question. I want you guys to take a look at this location right here. Is this balance or imbalance? Coaching students, is this area balanced or imbalanced? Okay, someone says imbalance. Believe it or not, this is balanced. There's no gap. Look at that wick. This looked like it was an imbalance, but that wick balanced it out right here between this the close of this candle, the first candle, and the opening of this third candle. Boom, that wick balanced that out. The close of this candle, and the close of this candle, and then the opening of this candle, the third candle, right? So let me ask you, with that being said, with that clear evidence, do you see why I say there's a high probability price is not going to exceed that area? It has no technical reasons. That's right. It has no technical reasons. If it goes up there, it's all fundamental. And you know, you guys already know fundamentals is unpredictable, right? Especially geopolitical. It's just nothing that needs to go up there. It's balanced. That's why, think about it. That's why I didn't go here. That's why I didn't go up here. And that's why I don't believe it's going to exceed here. Now, it could, right? I'm not going to say it can't touch this level or even at this level. It has no reason to, but the highest probability is here. Okay, so with that being said, this is how I see it, right? This is a very key level. Can you agree with me, guys? Very key levels here. So if I was to put a category of probability, let's put a category of probability, high probability. We're coming back down. Medium probability of reaching this level. I even go as far as, let me go to this. I'll go low. I'm having fun here because I'm looking at these charts and I'm going, come on. No freaking way probability. How about that? I'll go as far as that. That's where my spider senses of price action is telling me. Right, and let's take, okay, that's the monthly. Now let's take a look at the daily. Look at that. Ooh, it's having a hard time, right? This key level right here is having a hard time here. Bouncing at this level. It could go to this level. Yeah, that's a possibility, right? And this is a very medium possibility. Okay, that's fine. But here's what's telling me. It could bounce off of here. It could bounce off of here. It could bounce off of here. And my coaching students know we're going to buy, we're going to sell here. And the breaks, we're going to sell here. Because this is where we're going to make our money. We're going to make our money coming down. We're going to make our money coming down. We're going to make our money coming down because we know it's coming down all the way down. We got some very key levels here. Look at that. Very key levels. Go back to the daily. What's going on? There we go. Look at that, right here. These are very key levels here. Go to the daily. Oh, where's my order blocks? Oh, well, I'll tell you what, I'm gonna do this. You guys know what we're first looking at? Looking for the 50% right there. And lo and behold, what's near there? You like that? That's our money line. That's where we're going to be taking profit right here. Let's bank that. It's coming. I'm excited about it because our account balance is going to go through the roof. And all we got to do is stay patient and disciplined. It's coming. This is what I love about price action. Okay. And history has already proven itself. We've already looked at it. Okay, that's CAD JPY. Let's look at RJPY and then NCD JPY real quick, because they're both the same thing. Okay, this is on a daily. This is RJPY. We could see some strength in RJPY. That's fine. Let's go to the monthly real quick. I can see it. It's already there already. And then after that, that's it. It's not going any higher than that. Whew, look at this, guys. Come on. Come on. Come on. Now, we were here too as well, which is here. If we get here, you know, think about it, right? You guys already see it. look at that one. Yeah. About here. Look. Down here in the RMI level, right? Could we go here? We could. We could. I'm not going to say we won't. We could. Right? And that's what, and that's not an easy few pips, right? We're talking about another 681 pips. I doubt it. I don't see it going up that high, but if it does, I'm selling everything I can. I would throw standards on that damn account. If it goes there, boy, I hope it does. You're right. I want to sell everything I can at it. I'll put 10 standards. This is already prime, right? So this right here is what we call our sell zone, right? This is our sell zone. Anytime you get in here, we should be selling. You should be having nothing but sell loaded up here. Sell limits like it ain't no tomorrow. I'll put a sell here. I'll put another one right here. Like say for instance, this is what we're doing. I'll put a sell here. And I'll put another one if it goes up. I'll put a sell here. If it goes in the drawdown, I'll put another one. Let's do it. Put another one right there. Right. The price wants to go there and wants to squeeze me out. We trade small enough and long enough to be able to weather the storm of a drawdown if it goes. Right. If it goes here, that's fine. Because we know it's going to go here. Right. If it wants to go higher than that, that's fine. Guess what? We know it's going to come down, right? And these are key level. Why? Because we see price action already telling us here. It already told us here. It already told us here. It already gave us a clue here of what happened when price reached this level. This is the most recent, 2015. And it went down after that. Look. 2,400 pips. Okay, what if you held back after pullback? Oh, it went even further than that to 3,300 pips. Okay, that's what price did. Came down here, came up, came all the way down. We're right there now. And if it goes even further, it's even stronger evidence that you should be doing nothing but looking at sell. This is the history price monthly on our JPY. Okay, I'm bearish. Let's go NCDJPY. Look at same thing. Come on. This is on a monthly. Come on, what are you at? Let's go to the weekly. Look at price. It's having a hard time breaking this weekly high right here. And there's some key levels here that I could see price come up. All of this right here. I don't see it going that high. Maybe at this level here. If it goes higher. But I don't see that, right? I don't see it coming that high. If it does, like I said, I'm willing to sell it anywhere in this area. Even if it goes here, I'm willing to sell in this area. Okay, price is already here. It's already here. It's already here. All this was buying season, selling season. Okay, this is nothing but sell here. Nothing but sell here. Sell, sell. I'm doing nothing but sell, sell. Okay. And we're going to sell all the way down to our targets. Okay. So overall, I'm bearish. I'm looking to sell more in NCDJPY. Like I said, if it does pull back, in NCDJPY, yen crosses are looking to go short. And if it doesn't go this week, next week look like a great time. If it doesn't go next week after that look like a great time. We just need to hang on just a little bit longer. We got some key news with the Bank of Japan making a monetary policy adjustments announcement next week. And even though Australia and New Zealand dollar may go strong this week, it may, and it may push this up a little bit, right? I tell you what, when it does, I'm not selling right now. Don't sell right here. Wait for a quality pullback if it does, right? We're looking for a quality pullback on NCD JPY and our JPY. If it breaks this level right here, this would be a good quality level to sell. If you were to put a sell limit, put a sell limit right there at the high, right here at this high of, I would say 86. Let's see, yeah, 86.5. And then put another one right here, right above that level. And that would be at 89, 89.6. You can go as much as 90. No, I would say 89, 89.7, 89.6, anywhere in this level, if it breaks high, right? So wait for a quality pullback, because it could bounce off of this, right? Price is here now. Price rejected that. It could be in this range, who knows? It could be doing this before we pull back. Or it can pull and then go higher, and then pull back down. Either way, we're in a very good prime position to be shorting the highs instead of buying the highs. Okay, that's in CDJPY. All right, your USD. Let's go to the Euro pair. This has been one beat up market. Let's go to the monthly. Okay, so we're basically at parity right now. And I can't see how it can go any lower than that. I mean, like I said, if it goes any lower, it could come down to 0.97, but with the Euro central banks getting ready to make their announcement tomorrow, I mean, not tomorrow, next week, if anything, this could pull down. How many pips we're talking about? Another 500 pips? Who knows? It could, right? It could. I don't see it going that low, but it could. But if it does, we got to be buyers. We got to be buyers. If I scalp, I could scalp this low, but I'm already in damage control, meaning I'm looking to hedge, but I can't hedge the lows. We got to wait for it to pull back, right? Because right here, and right here, all of this told me that the market is going to go up. Like right here, the market's going to go up. And we are there now. Look where the market happened when it was here. How about when it was here? How about when it was here? Look at that. Market went up, market went up, market went up. This was key lows. Are we there yet? We've been there. And we're waiting patiently. I would say impatiently for some of this. We're past there, exactly. So this is all about holding Euro USD. If it goes down, we got to get ready to put another buy. I'm waiting for key levels to break for me to go buy again, right? This is what I'm talking about. I'm going down to the daily time frame right now. This is a previous daily low, previous daily high. I'm looking for us to make this break up here, right? That's what I want to see. And that right there, from where it's at right now, it's about another 184 pips. So I'm getting ready to put a buy stop order here. I want to put a buy stop order here. This is the previous daily high. This is where I want to see a break, right? Hope it doesn't go this. This is what I don't want to see. I don't want to see it go and take my order in and take a buy stop and then liquidate me down. Then now I got to hold this back for another drawdown for it to go even lower, which I don't want. So I have to wait for it to come back to a key level to break this daily high and come close to the daily weekly high or the daily previous weekly low, right? This is a very key level. But right now it is bearish, but there's a lot of imbalance here, a lot of imbalance that's just got to happen and get mitigated. And I'm looking to see Euro make their announcement, but I got to wait for CPI data. I got to wait for the Fed make their announcement, but I know the central banks is going to make their announcement first before the US dollar make their announcements. And I want to see this, go higher. And then the other thing is, I want to see this break. I want to see this trend line break. This trend line break here, I have nothing that's telling me that we're in a bullish momentum yet. You guys see any green on that? On the relative strength index, I don't see any green yet. So nothing is showing any green yet. We're still showing bearish. So instead of show green, which I'm sure it's going to probably show green once we get to the previous, once we start to break this previous daily high and maybe the previous daily low, we should start to see this come around, right? This is the 50% level here. So we're well in bearish territory still with no bullish momentum. That is not a good sign for you to go ahead and go buy now. You got to wait. You got to get some signs. You got to get some confirmation. You got to get a break. If anybody is looking to get into a trade and say, when do we start to buy, Euro USD, I would say wait for the break of this right here. Wait for the break of this previous daily high of 102, 102.2. Once you see that break, then look for the break on the upside for a buy. I wouldn't buy right here because we don't have any signs of momentum yet, or bullish momentum signs. Okay, but I am bullish. Let's go to pound USD. Ooh, this is looking really good too. But again, it's the same thing, same story with Euro USD. But I want you guys to see something. What do you guys see? Question, like Chin said, we've been there. All right, exactly. I agree. We've been there. And we are going to be there. The point is, are you going to be around long enough to be disciplined enough and be patient enough to see it? Right? That's the question. We do not want to close our position because we can't hold and be disciplined enough to realize what we're getting ready to see due to normal market conditions, that if we get out and close our positions or we get stopped out because we didn't, stay patient, it's coming. This is a very key order block right here. And this is all we need. But it's going to be much, much further than that, right? Remember, this is the monthly. This is the monthly chart on pound. Let me go to more data here. This is monthly. This is the top price of the history of pound USD. And this is the bottom. This is where you want to sell. Anytime price is here, and anytime price is here, what do you think we should be doing? Going long. And if you're not going long, and you're thinking short, and the history of pound USD prices all the way back to 2002 here, right? From what we see from a data perspective, making a grave mistake if you are not buying. Okay, this is buy zone. This is time to buy, not time to sell. right? This is not time to get scared. This is time to get excited, okay? And the only excitement we got is we wait. We have to be disciplined. We know it's coming, right? A lot of people can't see it because they're not reading charts. They're looking at their P&Ls, which I understand. If you're looking at your P&Ls and see nothing but red, yeah, I'll be a little concerned because I don't know what the hell's going on, right? But we do, and this is what we got to do. Okay, let's look at odd USD, NCD USD real quick. Odd USD, NCD USD. Okay, which is just a monthly chart. Okay, monthly charts. Yeah, no way of giving my money to the market makers for what, right? We're going to what we need to get to. Odd USD. There we go. Okay, odd USD. It's on a monthly. Now there is some support here, right? Well, I do see that. For odd USD, even though I'm not in odd USD, right? But I am bearish. I'm bullish. I'm bullish odd USD, right? I don't see price coming all the way down here, okay? Because again, I'm down here and I'm looking for imbalances. And I see this is mitigated. I see this is mitigated. This is imbalanced, but I saw it mitigated here. I don't really see any clear imbalance. So when I see that, I'm thinking, oh my God, this was clear. This right here was cleared up. That was mitigated. This was an imbalance. That was mitigated right there. I'm like, oh my God, this is clearly balanced. This is pretty good. I'm looking real closely at it. Odd USD. Wow. So when you say that, there's no reason for it to come down here, right? Oops. Okay, so we got some key levels here for let's see, Gene said you could advertise your arbitrary service and coaching clients and hunters are already used to waiting and maybe not even getting a shot. You're right, you could. All right, so, oh, what happened? Odd USD, okay, here we are. Okay, odd USD, we're looking for strength. This is on a monthly. Again, this is at a very key levels location here. It doesn't look like it went low enough, but it already corrected itself here. Let's go to the weekly. Ooh, it's already low. This is already low. This has been low. Okay. It's already at a 50% level swing. So if you look at it from the swing low of the weekly, right there, there is two levels that I could see. It's already at a 50% on a weekly. If odd USD goes lower, these are the key levels that I can see it go, right? 618, 786. So this is high probability. We can see a correction here, medium, low probability, right? 0.64 and 0.60 for odd USD. Again, high probability, medium, low probability, meaning I'm looking for a price to reject here. If it goes lower, it's going to reject here. And if it goes here, which is a very low probability, I can see price come down before it comes back up. Make that a little bit cleaner. Okay. So that's why I see odd USD. I see I'm bullish on odd USD. I do expect odd strength to be able to push up dollar. But if it, if it does go a little bit lower, there is a little bit of imbalance here, which is almost mitigated. And I like to see, odd USD come up. But if it comes down, then I'm definitely looking to buy. I am right here in this zone right here. This is what I'm looking to buy. Okay, so I am bullish on odd USD. In CDUSD, I'm the same thing. I am bullish on NCDUSD. This is a possible level on the weekly. So I am bullish here. If it goes lower, I am definitely buying. So these are the key levels that I'm looking at. Let's see what's the 287 possible. Yep. So I have another buy limit right here. If it goes that level, this is high probability. Let me put it this way. Right here. High probability price can go right here. Medium probability price can come here at this level, and very low probability price can come here. So either way, we are doing what? This is our buy zone. Okay. Anywhere in this area, we should be buying. Okay. You should be looking to do nothing else in this area but to buy. Price goes down. Yeah, it's bullish. It is bearish. Yeah, it's clearly in the downtrend. But we've been down for the last 3 to 4 months, right? So we're looking for now at the bottom of this market. Let's go back to the monthly. This is the monthly. This is the top of the market. This is the ceiling. And we got the floor of the market here. Right. Now, each time price comes down, went up, came down, went up. We're there now. Right. Could we go a little bit lower? Could. We could slightly. Right. There's a slight likelihood that we can come here. And there's a likelihood we come here. And that's okay. But I'll be looking to definitely buy that. I don't think it'll come that low, but either way, I'm looking to buy that, right? So it needs to come a little bit lower for me, and then I'll be looking to buy. We'll see what happens this week with the New Zealand dollar and also the Australian dollar strength, okay? With that being said, let me look at a couple more pairs. So let's look at the CAD. So your CAD, go to the daily. So based on the daily, I am bullish on your CAD. So, ooh, look at that. Look at that. Ooh, I love it. Price came just low way over here in 2015. And put a straight line across that board. And let's go all the way to the right. And we are just about there, okay? Euro CAD, pound CAD. Ooh, pound CAD. We should be doing nothing but looking to buy on pound CAD as well, right? That's why I'm bullish on Euro CAD and pound CAD. Okay, Euro odd. Well, it didn't go up as far as I wanted to. So it's looking like it's breaking this little trend line here for the downside, which is fine. If I was to put a fib here, it is almost there quite to where we want to be buying. So I do see a little bit of bearishness on Euro odd, but after that, it's going, right? So it can come down there, it can come down there. So in other words, euro odd is not ready to buy. It broke this trend here for euro odd strength, but Australian strength could push this down a little bit lower, right? So I would not look to buy euro odd until it gets a little bit lower at 618 level of 1.47 and even as low as 1.45 before I pull the trigger and looking for buys on euro odd. Pound odd. Ooh, same way with pound odd. Okay. Pound odd is looking like they got some key levels here that can still continue to go. All right. So pound odd and euro odd look like they got a little bit more room to go. I'll go ahead and move this real quick. Yeah, so it's looking like it's breaking that trend as well. So euro odd and pound odd are pretty much correlated, right? So if we see more bearishness on euro odd, we can expect to see more bullish bearishness on pound odd as well before we come back up, okay? So in other words, I'm looking for it to come down here before we buy, okay? So do not buy pound odd until it gets this low, right? We're in this range here. Look at this range, okay? So if you were to buy pound odd, buy it right here and put another one right there. And this price is at 1.67, okay? Those are the two locations where I see pound odd getting ready to make some serious move to the upside, okay? Yeah, I don't see it going any lower than that. In other words, I don't see price coming this low at all. That's, you know, we're talking about another 1,800 pips. No, I don't see it coming that low. It'll come up before it comes back down. Okay, so we got a lot of imbalance here. So in other words, if it's going to go down that low, it's going to need to come up first. These got all the strong support, and I don't see that happening, especially with you know, upcoming euros news and things like that. So target for pound odd at this level up here. I would even look to sell pound odd until it gets this level, and it may even be exceeded that. Once it gets up here, it may even come down before it even comes down, right? So again, if you see it coming down before it comes up, and this is on pound odd, and if it breaks that level, which it could, then I'll be looking to buy there. So this is where I would be considered buy zone. Okay, so that's on pound odd, your NCD and pound NCD. I'm going to go the same thing because it's basically similar. Okay, especially when you see this. When you see that trend line break, and this is higher highs, higher lows, and then it comes down. This looks like it's going to come back down. It's not even at the 50% level, so it's still got a little bit more ways to go. So I do expect a little bit of move, maybe somewhere around here before we go up. Okay, so I'm bearish on your NCD. Okay, so your NCD, I'm looking for it to come down to at least 1.61, and if not even further, a little bit lower, 1.59, or even lower than that at 1.56. So those are three levels of potential buy limit that you would want to put one there, possible one more there for your NCD. If I was to buy, right? This is on our discount zone area. This is premium. This is not where you want to buy. This is where you want to buy, especially when it gets down to the 618 level, 786, and anywhere around here. I even go with that in this low area. This is a great setup. If you were not in a trade, And if you wanted to test this out, which is probably what we're going to do in our coaching session, we'll probably pick use your NCD pair, and this is where we're going to put our position. We're going to put one there, put one there, and we're going to put one there. And if it goes against us, this is where our damage control line will be right there. If it goes against us, and we'll play this one out. So I like this one. Get set up for pound NCD. Ooh, same thing, same thing. They're both correlated. Anything like euro CAD, pound CAD, euro odd, pound odd, same thing, right? So this thing has been riding on here. I am bearish on pound odd a little bit. I like to see it. And the reason why is just right here, right? We're in our premium zone. We can't buy here. We have to wait for it to pull back. So I want to see it pull back here to 618 before it goes up. I would put I'll put a buy limit there. If not, I'll put one here. If not, I'll put one down here. Those are three areas of location that I will put a buy location, buy limit, okay? And scale into that trade. Okay. Oh, this is a very good strong area. Very good strong. Okay. Right here. This is what I want to see. Look at that. Each time it went low. All right, this is that one right there. And it's going to come back and it's going to do another one. I see that coming. Okay, before it goes up any higher, it needs to pull back for us. Okay, and that's for a pound NCD. Okay, guys, that should close out our trade for today. Can we do oil? Want me to take a look at oil? We'll take a look at oil real quick. Thank you, Mike. And I'll look at oil and we'll close that one out. Oil. Let's look at oil from a monthly perspective. Look at oil. Look at you. Oil reached as high as 148, right? 148 back in 2008. And then it came all the way down to the zero level, right? When the market kind of crashed for the darn post-COVID situation. And then it's been on this bull run this whole time, right? So on the weekly, oil, weekly previous high is 124.415, previous weekly high. Sorry, previous monthly high. Previous monthly high was 124 a barrel, $1.24.41. Previous weekly and daily high was 115. Okay. Now here's what we're saying. This right here is a key level. And this is $93. Okay, let's go down to the daily. So price went up to 124.41, which is a previous monthly high. And then we saw a nice correction where oil went all the way down below $100 to 97.49. And that was on last week, Wednesday. So on last week, Wednesday, it came down to $97.49, and then it came back up. So for the last 2 days, last week, the end of the week pretty high, and went back up over to 105. Where's that right now? About 105. So here is what we need to see with oil, okay? This is very, very important. If you draw a trend line, this is on a daily time frame, you draw a trend line, and it's already at the previous daily high, right, and the previous weekly low. If price continues up, this is target. I can see it coming back to the previous weekly high of 115, right? But it needs to break this level here. This is what I'm talking about, right here at price 107, right? If price breaks price 107, then I can see it going to 115, okay? However, I am bearish on oil. Yes, I do not think it's going to go past, I don't think it's going to go past this previous, this high right here, not the previous weekly high, but this previous daily high, it's right here, 112. I don't think oil is going to go that high. And the reason why is because of market structure. Look what we're looking at. This was the high, 124. It came down here, 103. Lower lows, lower high, lower low. We could come right here to 108 and boom, come back down. That's what I like to see. I like to see oil come all the way to this level right here at $86. And that's when price will start for gas start to be in our normal range, right? Of $86. And then the next level I see here is $76 before I think it was going to bottom up around here at $62. Okay, so if CPI data comes up high, I need to see oil come down. Inflation goes high, then I want to see more oil coming down. If CPI data comes in low, then that means inflation is not an issue and oil to go up. This right here, it'd be anything that's driving fundamental news. As we have an oil crisis, that means we have a scarcity in oil, because oil is a very high commodity driven market, right? It's driven strictly on supply and demand. If there is a scarcity in oil, anything regarding oil with sanctions of oil supply, of limited supplies and less production and lower availability, then that's going to be an issue. If we hear any news about oil is getting in high supply or less travel, or we got more oil inventory, or we have India pushing more oil, or we got more oil getting released of inventory, then we can see oil come down. So this is where I see oil. This is where I need to see for oil to give me a determination what's going to happen. So in other words, this point right here of 107, this is the key part where I'm going to be looking for oil at 107. And if it breaks that, I like to see it go no higher than 111, right? Because right now, then we're looking at oil prices going even higher. Oil prices is already looking bearish, which is great. That means prices are coming down. That means the interest rate that's helping is bringing the economy down, bringing prices down. My target for oil is here. If oil comes up, I am selling. I am not doing nothing else but looking to sell. If you go here, put swing high, swing low. Right now, I can't even sell it. I can't even sell it until past this level. Right now, we're in premium discount. It needs to go into a premium area of like right here. It gets a lot above 50%, and it goes to the 618 level, and it goes to this price level of 115, 113. Then I'll be looking to short it. Okay, I don't see oil going back to 124 unless there's some unforeseen geopolitical reason, like right here. This was the this is the day of the announcement of Russia invading, Ukraine, right? Occupying Ukraine or starting a war with Ukraine, right? This is when it went up, and then we got pushed down, came up, and then we ranged here, and then we had this whole, anytime right here, this is oil going like $7-8 a gallon, right, at gas pump. It's now coming down to a little normal level, but we need to see it drop, continue to drop even lower than 100, lower than 94. Right now, it's at 105, back to 105 barrel, but it's still not to where it was on a previous swing high, right? Look at this. This is a swing high, swing low, swing high, swing low. What are we going to see, right? This is what I need to see. Price do not break. If it breaks this 112, that means price is going to go up here. All right, we could see price come up here. I don't see it until it breaks here, right? And my best, it's going to come down to 94, and then 86, and eventually 76. This is when things is going to get a lot easier when gas comes down to $76. And I guarantee you guys, it's coming, right? We were here. Look at this down here. We were here. And we were here, right? Now, when price was here, it went up. We are there, right? And price is here. So that means we may see a little bit of a rebound, which we're seeing right now, right? We may get to the 50% level and then maybe come down even lower, right? So this could be an opportunity to even come down, right? If it crosses this 50% level and it crosses that price of 112, then I'll be looking to buy oil, or not buy, I'll be looking to sell once you get to a key level, even selling here, or even selling there again, especially if it gets to this level right here. Ooh, I'll be looking to sell. I'll put a lot of money right here. I'll sell this. Ooh, I'll be looking to sell, okay? But this right here is sell zone, but I need to see it come a little bit higher. Okay, Mike? So price of oil could come up a little bit, but I'm not sure how much further. I like to see it. If it breaks this level 106, then price is going to go to 115, 112, 113. But if it doesn't break the 112, 1213, which is right here where that trend line is at, between 113 and 16, it's coming down. And we're looking at 93, and then after that, 86. Okay, but if it does break this 106 and if it breaks that 112, then we're going to be looking at 119, and I would be selling at 119, and I'll put another sell right here at 125. But I don't think it's going to go any higher than 119, 125, depending on what's going on with the CPI data. Okay. All right, guys. Hope you guys enjoy. This is looking really good. I'm very excited. One of the most important things to look at the market when we look at these fundamentals, and it tells us a story, right? These are the tail tells the story here of what we need to be doing in the market when we have extreme level of the market, which is an edge of where we can, it's a softball pitch, right? Unfortunately, we got in a little bit earlier, but I don't like to say we got in a little bit earlier. I like to say that the market extended where we believe the market shouldn't have even gone even further, right? Because we're in unprecedented territory, and we're in unprecedented time in history of where the currency market is. But the good thing is we know where it's going. It's just a matter of time and how long. And that's all we need to do. Okay, guys, enjoy your evening. Enjoy the rest of your week. Just hang on tight, stay strong. And I'm going to hang tight. I'm looking to get in some key positions and look forward to make some corrections this week with either the yen or the dollar, or some really good key points, right? So I remain poised and very comfortable and confident, and being patient. And it might get a little frustrating if it goes a little bit higher, right? If it doesn't go in our direction and goes a little bit higher, then we expected that it could possibly go just a little bit more, just to kind of squeeze you. We're all feeling the squeeze now. But just kind of be patient. Just be patient and be calm. We'll get there. Yep, and reload. I like that. All right, guys, thank you. And I'll have this recorded. I'm actually going to make this available for the client members. It's a long It's a long recording, but I think it's important if they really want to understand where we're at, especially with the extreme drawdowns we're looking at right now. Where some of us are looking at 50%, near 40% drawdown, which is totally understandable, but we're at a very key level as well for a very good either squeeze or a little bit more further squeeze or a very good correction and good payout coming soon. Okay, guys, enjoy.